Hi, welcome back to Elements in Focus. My name is Aaron Rheaume, the Director of Financial Planning. And as always, I've got Grant Sullivan here with me. We are recording on a wonderful chilly Indiana day in December. And so what better way to lead into that than talk about beneficiaries and why they're important to make sure you have them updated for financial peace of mind, especially leading into the holiday season, Grant. So I bring that up as a caveat, but just walk us through why in our offices here at FEG, we are always making sure that the beneficiaries are listed, updated, and on correct types of accounts.
Yeah, absolutely, Aaron. And so we always love doing this topic at year end, as Aaron stated, because we never know if a family is one Thanksgiving away from reorienting their estate plan. Now, all joking aside, what Aaron and I are wanting to get to is that it's very critical to ensure that you are looking at your plan holistically, which includes making sure your beneficiaries are who they want to be. Aaron and I do a lot of discussions with families. We do a lot of educational lectures as well. And a lot of our time is spent here because when looking at your beneficiaries, it is easy for a family to say, I want my family to be created equal, right? Treated equally, actually. And we generally will list out beneficiaries in accordance with our emotional intent. Now, oftentimes, good financial planning, right? When you take a look at all of that, you may understand through proper tax planning as you're working through this with year end that not all beneficiaries should be getting the equal amounts of money across the board. What I mean by that is maybe you have one child who should be getting different resources as a beneficiary, like more maybe Roth money because their income's higher than the rest of their siblings, and versus the other siblings getting other deferred money. Now, on paper, it may look skewed, but remember, taxes play an important role in deciding how beneficiaries get money. That also gets compounded as you look at entities, charities, for example, that you want to leave money behind to, which traditionally you want that from retirement accounts, because again, those charitable entities don't pay taxes. And so when looking at your beneficiaries and you're doing your planning, make sure you update them. The classic line in our industry is, oh, when you get a divorce, make sure you update your beneficiaries, which is very true. You need to. But oftentimes, you also want to update your beneficiary to make sure that they're who you want them to be based on the planning you do in the year. One of my bigger ones, Aaron, that we've seen, and I just had to deal with it a couple weeks ago, is when you create estate documents, like a trust, for example. Make sure they're funded, but also make sure the appropriate beneficiaries that you have listed in those estate documents match the other assets you have on the outside, even after they're funded. So don't let beneficiary designations just all of a sudden fall off the plate because you invested correctly or you've done your tax planning correctly, for example. It is critical yearly, at least minimum, you review who they are, review that you want them to be who they are. And as things and transition happens in life, make sure you update them accordingly. So if you lose a spouse or a family member unexpectedly, make sure you're updating and adjusting those so your state doesn't have to be reopened if you pass for an inappropriate beneficiary. But Aaron, I would say that's kind of the big element and the big piece to that. So anything you want to add
Yeah.
to that?
Yeah, great points. Just making sure that for things that you can put a beneficiary to, make sure they are listed. For instance, bank accounts. Sometimes folks don't put payable on deaths on their bank account. What we're trying to help folks do is avoid the probate process and making sure that your beneficiary designations on accounts that you can have are done properly. And the last thing, if your state allows it, think about putting a transfer on death deed or a transfer to a beneficiary on your house. You can do that here in the state of Indiana if you don't have it titled inside of a trust. Just make sure that you're designating beneficiaries on your house as well. If you have questions, if you want to talk through some of the income planning or the distribution strategies that we do revolved around beneficiaries and their income, please reach out to us. You can reach us at talktofeg@yourlifeafterwork.com. You can go to our website at yourlifeafterwork.com. Scan the QR code on the screen or simply call our office at 800-928-4001. Thank you so much for watching. We look forward to seeing you soon.